Good morning, guys. So Dan from Trading with Dan here. How are you guys doing? So today this is our Bitcoin and Ethereum Dominator and DMT update. So firstly, over to the 15-minute DMT chart. So you can see the sell line. We're still waiting for the short trade, the next trade. The sell line is currently at 24 and rising. This will probably settle out around this level somewhere here. So above 8,900, DMT 15-minute bot will take a sell. We actually just entered a 25-minute Dominator sell just here. So the bot has taken a short at 9,105. So we will see what happens with that short trade as well. That's on. That's on now. Currently about $20 offside, but the Dominator isn't sort of like a breakout strategy. So we can see what happens. See what happens with our third Dominator trade. Over to Ethereum. So the Ethereum 15-minute DMT. Ethereum looking quite strong here. So the 50-minute DMT is a long way away for the sell, but yeah, Ethereum's looking good. Ethereum's performing better than Bitcoin in this rally, but then that's kind of what altcoins do. They have a higher beta to Bitcoin. So over to the 25-minute Dominator. 25-minute Dominator was thinking about having a sell. This is what I'm going to set up to actually trade Ethereum. But yeah, so we'll see what happens there. Just sort of paper trading this at the moment to keep an eye on it, see what happens, because I'm not fully convinced I do want to set it up for Ethereum just yet. But yeah, so that's our Bitcoin and Ethereum update. There was a few interesting things that are happening in the market here. The 10-year yield, if I can just show you this. This is insane. This 10-year yield. It wasn't long ago that you had big fund managers, Jeff Gunderlock, saying that the yield would never go lower than 1.34 again, which I think was a low that it took, wherever it was. I think it was here, and then we rallied back up to here, and it was like we're never going to take out this level again. Yeah, well, 1.34. And you can see we took that out quite easily, and then yes, we did regain above that level again. And then some people have been calling for less than 1% yields on the 10-year, and they were pretty much getting laughed at. And just this is insane. I mean, we got under 1%, we got to 0.9%, which obviously is a big move from 1%. And this morning we've gapped down here, and we're currently trading at 0.79%. So this is going to have this is a big warning sign for the market. This is the bond market is a more professionally traded market than stock markets, and I know stock markets are off their highs, but these bonds are predicting catastrophe in the stock market, and they have been all along. Bonds are always right. Bonds are right. Copper's right. They call it Dr. Copper. Copper knows what's going on in the world economy. Dr. Kospi, the Korean South Korean index. That is a good bellwether for sort of global trade, global exports. That's got it right. It's only stocks that do their own thing, and everything else it just does the right thing, and it's spelling some serious problems going forwards. Yeah. So what else did I want to say? Yeah, oil, look out below for oil. We've got a bit of a problem in the oil market. Basically you get OPEC with the OPEC nations, and then you get OPEC plus, which is the OPEC nations plus Russia. OPEC plus had a meeting where they wanted to cut production. Russia basically said no. The OPEC plus sort of like they basically wanted Russia to reconsider. Russia walked out the meeting, so they were not there, so they left. They said no, we're not cutting. They left, and so then what they did to basically mislead everybody was they then said that everybody at the meeting that was at the meeting, 100% of the members at the meeting voted for a cut in production, but obviously Russia had left, and they weren't going for a cut. They weren't going to cut. They're flat out refusing to cut. So Yeah, so obviously that is bearish for oil. I mean, this is the manipulated world we live in. Like, we have a cartel of oil producing countries that basically say, oh, the price is going down, so we will just reduce how much we make to push the price up. So it's like, yeah, I mean, I guess that's how supply and demand works. But hey, if prices going down, prices are going down, aren't they? It's not like it's a bad thing for the world, is it? If we get cheaper petrol, oil and gas, it's not like in Saudi Arabia they don't just have to put a straw into the sand and then oil squirts out. Do you know what I mean? I mean, their cost per barrel, production cost per barrel is very low, so they can afford this. They just don't want to have to afford this, and plus they're obviously wanting to sell more of their Saudi Aramco, newly listed oil company, which obviously they've only sold part of to certain investors. So they're trying to do their own little unicorn IPO with something that they know realistically isn't going to be worth as much going forwards. I mean, it's pretty obvious. Everybody knows if someone wants to sell you something, then you don't want to buy it. If someone wants to buy something off you, then you don't want to sell it. You know what I mean? That's what it is. That's how trade works predominantly, isn't it? Like when it comes to things that you don't often transact in. Obviously, day-to-day things you have to buy and sell. But I mean, Saudi Arabia doesn't often sell its basically its main business. So if it's not, so things you don't sell often, like say you've got some gold coins and gold's going up, I mean, then you maybe don't want to sell, then you want to hold on to it because gold's going up, and then people want to buy it, and that's what's pushing the price up. So that's sort of what I mean there. So yes, oil's not looking good. Yeah, so there's lots of misleading things going around at the moment. Oh yeah, sorry, this final OPEC Plus meeting will conclude today. So I think it's getting priced in anyway. What Russia's doing. Yeah, so basically all these things, how this relates to Bitcoin, all these things are extremely bearish. Oil, the financial sector, which is getting absolutely whacked. I think if we look at XLF, can we get XLF on here? Yeah, the spider financial sector. I mean, look, this is in just February, so we were trading. This ETF was trading around $31, and we're now trading at $26. That's a horrendous move down. And you can bet that a lot of this is, well, part of it is this 15%. Part of this is to do with obviously collapsing yields, so banks can't make money. European banks have already proven that you can't make money in like a negative low yield environment. American banks had been holding up, but obviously they look like they're going to be entering a even lower yield, maybe even negative yield environment. And then obviously financials are heavily invested in wait for it, the energy sector, especially oil, especially shale oil in America. So this collapsing oil price, which realistically no one really wants to talk about at the moment, but it's pretty much going to go sub $30. I think the 10-year yield is probably going to go negative. Stock market's probably going to definitely go into a prolonged bear market. And I mean, do you think Bitcoin, which has its strongest correlation, its strongest correlation coefficient, its strongest R squared to the stock markets, is gonna fare well in this environment? That's something you do definitely have to ask yourself. Yeah, gold. Gold had its price smash. I mean, I have spoken before about manipulated paper price smashes, like in the middle of the night, when there's very low liquidity to blow out stops. But the sell-off we did have recently, that was purely a liquidity event, a margin call event. People basically needing to sell something to cover their losses that they've made, basically. And that quickly retraced and then went beyond. We'll just show you guys that. Yes, so here we go. Here we have the smash straight back up and then onwards and upwards. So yeah, I mean, if you look at this on a longer time frame thingy, that will just look like a big doji candle, pretty much. Maybe even a weekly. Well, maybe it doesn't like a doji, but either way, you know what a doji is. Basically, you go down, you come straight back up and carry on going up. So on some form of time frame, that will be a doji candle. Yeah, so things are not looking too good, I would not say. So I would be careful. Be careful with any core stock holdings you have. Careful with any or even if you're having, even if you have gold miners, things like that, silver miners potentially, they are still equities. First and foremost, they are equities, and they can get hammered along with equities. Even if the gold price is fundamentally strong and technically strong and rising, these are dangerous. This is dangerous times, guys. This year is going to be this year, and I even feel like the next week or few weeks or so, they're losing control. They've lost control of this market. The Fed has panicked. They've lost control of this massive debt bubble. There, everything is a debt. You can't just pump billions into markets every day and just think that everything is going to tick on as normal. And then when they did a smaller version the last time, before we were even in a recession, allegedly in a recession, they tried to then take away all of that stimulus that they put in. They tried to run down, the Fed tried to run down its balance sheet, basically tried to raise rates and run down the balance sheet, and they didn't do very well. Basically they didn't get it. They didn't run the balance sheet back down to where it was beforehand. So we do know from this that the monetization of debt is permanent. It's not temporary. They're not going to basically run it down in the good times. It's not a cyclical process like they claim. It's not even pro-cyclical, because it's just basically they do it when they they basically increase the debt in good times and increase the debt in bad times now. So if anything, you could probably say that's gone to a, what's the opposite to cyclical? Not the cyclical, the secular. So we've basically gone into a secular bull market in debt, in increasing debt. So there we go. So that can't go on forever. They could pretend that it wasn't a secular growth in the debt, but they can't pretend that now. So we've got some interesting times, and I'm literally every weekend I'm thinking, right, we're going to wake up on Monday and they're going to basically have done changed something. Something's going to have happened. There's going to be a plaza accord. There'll be some sort of new digital currency. There'll be, because they know, like, just imagine yourself in Jerome Powell's like place. You just know there's nothing you can do. You've shot your bullets into the market. You've taken your shot with your emergency 50 basis point cut, and then, I mean, if we just look at what the ES did, I mean, I'm sure you guys all know what the S&P did. We had a little rally on it, which was there, and then we just sold off. We then tried to get back above it again, and then just sold off. And this is, we're going to take out this level. We're going to take out our other low before. I mean, I'll make these calls now. I mean, we've got disaster times coming, guys. We're going to take out this level. Hedge funds, people, whoever buying this dip. So there's a lot of liquidity down here. A lot of liquidity all this way up, where people are buying back in, and these guys are going to have to stop out. And then people, stronger hands that haven't stopped out, are going to have to stop out. These markets are going to get trolleyed. The main problem we got going on here is a blowout of spreads between junk bonds, corporate debt basically, and obviously the 10-year, obviously government debt, which you can see is basically the yields dropping. So that blowout is showing that we're having like a credit crisis. There's a credit event going on. So all these companies are not going to be able to afford to refinance. All these loss-making companies, all these highly leveraged companies, they're just gonna. There's no saving these guys. There's like this is it. This is basically the end of this bull market, at least. I mean, we're just going to go into a prolonged bear market, and yeah, so you guys need to ask yourself, what do you think that means for Bitcoin? Even gold, which is a fully proven hedge against this, has catastrophic drops when we actually do go into a proper like market meltdown. So yeah, I just can't see Bitcoin performing better than gold, and gold will be going down. So yeah, another thing that is happening is the GBTC premium has been going up, I think, because lots of people on Robinhood, a lot of millennials trading Robinhood can only put GBTC into their can only buy that in their what are their 401s or whatever they have in America, 401ks. So they are buying Bitcoin, obviously in anticipation of a stock market collapse, which yeah, to say the least, I don't know how well that is going to play out for them, but you guys kind of know my general opinion on that. So yeah, so there's some liquidity in the market to get squeezed. So yeah, so I mean, my views on the overall market, everything looking so bad. 10-year bond yield literally collapsing at levels that people a couple of weeks ago wouldn't even have believed they were going to see. Oil not catching a break. Stock markets nothing. I mean, this is all looking really bad. So what I can say, guys, is just be careful. Be careful. Just be careful. What I will say is good for us. At least Bitcoin is open at the weekend, so we're not getting any gaps that we get stuck in trades. We can always have our stops. Yeah, obviously unless you're trading on the CME or GBTC. But yeah, if you're trading like just the normal futures on whatever platform you choose to use, at least you can get out your trade and you won't wake up in the morning with $1,000 move in the price of Bitcoin just at the open. So yeah, anyway, right, so remember, it's definitely not financial advice, guys. Yeah, and I'm glad there'll be a lot of you out there that are just glad this isn't financial advice and that maybe I'm just a lunatic, but I would be very careful, guys. So yeah, so thanks for listening to this video. Yeah, remember, not a financial advice. I'm not a financial advisor. Always do your own research, look at these charts yourself, see what you think. So right, thanks for listening, guys, and I will be back at you guys with another update. Maybe later on this afternoon. If not, I'm actually quite busy tomorrow, so I'm not sure whether I will get a video out tomorrow during the day. If I do, it'll be early in the morning here, GMT time. If not, it may be very late in the evening, GMT time. But if not, I will do a video on Sunday. Right, speak to you guys soon.